couple of big stories here. One of them is the crypto crash. We're going to talk about that. Was it SBF, Sam, what's his name, Bateman-Fried, something like that, given $40 million plus to the Democratic Party. He's going to meet his maker one way or the other. And inflation report, wholesale inflation, producer prices came in light today. So let's talk. We have John Carney, Breitbart economics and finance editor and co-author of Breitbart Business Digest, and Joe Lavorgna, former White House chief National Economic Council economist and now chief economist at SMBC. As a former NEC economist, just want to say, after my riff and my discussion, when Trump talks policy content, people love it. When he talks trash, people hate it. I get that. But when he talks policy, people love it. You were there. You helped formulate that.
He does. But I guess my response, Larry, is that it's hard to divorce the policy from the personality. And it's going to take a real tough, aggressive, no-nonsense, let's make a deal personality to get some of those policies done. But I hear your point. There's some roughness around the edges, and that's just the way it is.
I don't want to go too deep. We're going to cover this announcements thing later on in the show. But since you were there. John, am I wrong, though, on the policy achievements? You can't take that away from him. You cannot take that, even his biggest detractors.
It was brilliant. The way the economy looked in 2019, after 2.5 years of Trump, right before we fell into the pandemic, it was the strongest U.S. economy that I can remember, in a generation, basically. And so if we could get back there, that would be a really, really good
Joe Biden says the inherited economy in ruins. And $2 trillion spending package would trigger the inflation. It's a serious point. In ruins. It's an absolute fraudulent lie.
It was a terrible lie, and it is, as I've mentioned before, it's the lie that caused inflation. If they could have admitted that the economy was already recovering, then we wouldn't have had to pass $2 trillion of spending, and we would have had inflation. Don't get me wrong, we were coming out of lockdowns, we would have had some inflation, but we wouldn't have been looking at 8, 9, 10% inflation.
Right. John Carney, SBF, is this guy going to jail? What's going to happen to him? Because this is an ugly story. Everyone's talking and gossiping about it. I don't want to get too deep into it, but his exchange has gone down. He's lost his fortune. Is he going to jail?
I do believe he is. We still have a lot to learn, but he has lost a lot of money, and he was apparently transferring customer funds into a hedge fund that he managed. We don't know what happened. How did they lose all of that money? The exchange, FTX, is stuffed with its own currency, its own coins that it creates out of thin air. So where did the client money go? Was it ever really there? Remember, under Bernie Madoff, a lot of people thought they lost more than they really did because he had lied to them about what the returns were. I suspect we may discover something like that here, that he never really did have $16 billion of customer money, that he had half of that, a quarter of that, but it got inflated by him exaggerating the returns or stuffing them. Again, I don't know this. We're still finding stuff out. I suspect we'll be talking about this for several more weeks, maybe years.
Joe, what's interesting about this story, or one part of the interest in the story, is the U.S. banking system is doing just fine.
Yeah, it's
plenty of capital, no crash. This is not 2008, at least not yet.
Yeah, it is. I mean, the problem, of course, with all this is we have free money for such a long period of time at zero rates. Basically, people are going to do really dumb things and also fraudulent things. It's interesting, though, that cryptocurrencies themselves, some of them such as Bitcoin and Ethereum, have actually been pretty solid. The problem has been the exchanges. So unfortunately, crypto is getting painted with a broad brush and is being negatively portrayed, but it's actually the exchanges. And the fact, basically, this person set this entity up with no regulation and no oversight whatsoever. It's really remarkable.
We're going to need some kind of guardrails here. We're going
the
to need
hardcore Bitcoin people actually say this proves that you should use Bitcoin and not the exchanges. They say the problem is really the ecosystem that was built up around cryptocurrency and not the cryptocurrency. If you keep it on your hard drive, then it's safe. The problem was everybody put it into the exchanges because that was very convenient. We're now learning that, without any regulation, that's a disaster.
That's a great point.
Interesting point. Coinbase is an exchange. It's still afloat, right?
Why not?
Or am I wrong?
No, it is.
And so is there a problem there?
That I don't know.
I will say that they have, because they're a publicly traded U.S. company, there's a lot more scrutiny in what they're doing. These offshore exchanges are really a big problem because we don't know the regulatory regime that they operate under at all. And as we're seeing, I mean, the published balance sheet that Sam Bankman-Fried was going around showing to investors, trying to raise more money, looked like it could have been written in crayon. It made no sense, and it was not the balance sheet of a sophisticated financial institution by any means.
So if Gary Gensler, the SEC, starts regulating us, he'll force them to take all the money from the exchange and put it into the Green New Deal. Because that's what the SEC does. Everything they do now is Green New Deal, even though they don't have one green expert on their staff. Joe Lavorgna, is inflation dead? The PPI was up only 0.2, way below estimates. 12 months, it's up 8%, but the last 3 months, only 1.7% at an annual rate. And if you take out food and energy, not that you should, still up only 2.6%. Is inflation dead?
No, it's not
Should
dead,
we
Larry.
party?
It's not dead, not party yet. But as you know, I'm very negative on the economy for a variety of reasons. The yield curve, in particular, has been signaling for a while there will be a recession. And typically, when you have recessions, price trends tend to weaken. So I believe that to be the case. The question is, when the Fed does ease, will they over-ease? And if they restart QE, how much will it be? But inflation is going to slow. And that's why the equity market was up and the bond market rallied. And the market's also now started to take out Fed tightening. So we've got now 50 basis points of easing priced into the curve late next year. And that's why the dollar, I know you watch the dollar closely, the dollar's been so soft.
Yeah, it's been soft. Actually, commodity prices starting to pick up. Fed better be careful. Yeah. They move too fast, 1970s replay.
Well, they're worried about that. That's why they've been so hawkish.
I mean, I saw Chris Waller, Federal Reserve Governor, smart guy from the St. Louis Fed, pal of Jim Bullard's. He said, wait a minute, we have to see much more evidence of inflation waning, John. I think Waller is correct.
That's right. The market got way ahead of itself last week when it threw a huge party because they looked at the CPI report. They started to do that with the PPI report actually today, but kind of backed off because I think they got the message from the Fed people saying, look, 1 month isn't a trend. We need to see inflation coming down. This was a good PPI number. 0.2% is around where we averaged in the years before the pandemic. If we could keep it there, that would be good. But there's, again, we've had head fakes. We had a few of them this year already where inflation came down and then it went right back up. So we need to see, was October weak? Or is that weakness going to carry through into November and December?
That's another point. I don't know why I didn't think of it. But the crypto crash hadn't affected the stock market.
No.
Hadn't affected the bond market. What did it affect? I mean, it affected, I guess, people invested in this thing. We don't even know who those investors are yet, do we? We have any idea who they are, besides this guy? I mean, it hadn't affected anything.
My understanding, and John could correct me, but I'm hearing in the crypto space, broadly speaking, including the currencies, we've lost about $2 trillion in wealth. If you overlay that with the Fed's flow of funds data through the second quarter, we don't have Q3 numbers, it's about $6 trillion. So we've probably lost this year somewhere at least 8 to 10 trillion, let's say, on average. That's a huge number. In total assets, total household.
Consumer net worth.
Consumer net worth, right. Yeah. And
that's stocks, bonds.
Everything.
Housing. Okay.
And that, to me, Larry, that gets me concerned that, again, the economy's got a lot of headwinds that it's facing, and the regulatory backdrop may not be as bad because of divided Congress, but it's not going away, and that makes me negative for 23.
Well, you need growth policies. But, John, I don't want to, with great trepidation and fear and loathing, I raise this point. Sometimes M2 is an interesting, useful indicator. Not always. In the heyday of Milton Friedman monetarism, which was really kind of the 50s, the 60s, the 70s, a little bit the 80s, Paul Volcker used it for a while. But you have to weigh in here. The growth of M2 money supply got to about 30% year on year in early 21, and now it has fallen. I'm sorry we don't have a chart. We'll get a chart and put it up tomorrow. But now it's dropped. I think the year-to-year change has actually gone negative. So you've gone from like plus 30 to minus something, 1 or 2%. Now, Milton Friedman would argue that is not only going to conquer inflation, but it's going to give us a deep recession. Nobody really talks about it. A few people talk about it. Ed Hyman talks about M2, to be sure. Does it mean anything? Should people think about this? Because if it works the way it used to work, you got a nasty recession, and you probably have a nasty stock market decline also.
I do think we are risking a very nasty recession next year. I think the Fed very well could be backed out of where they wanted to go. They wanted to keep raising and keep rates at, whatever their terminal rate will be, nobody knows, but they wanted to keep it there all through next year. They're going to face immense pressure because I do think this monetary contraction is going to weigh on the economy. And we're also going to see more ripple effects. You said we hadn't seen a lot of ripple effects yet from the crash of FTX. But more of these exchanges are very likely, if not to go under, to face immense pressure because people are withdrawing from them. They don't know what the risk is, and we've seen this before. It's a classic financial panic. People pull their money out, so FTX, one of the biggest, collapsed. Some of the smaller ones are probably also in trouble as well.
I can't wait. Joe, I know you don't like M2, but do you think it should be ignored?
No, I don't dislike M2.
It's not personal.
No, I
It's not personal.
I mean,
no, I mean you and M2.
No, I like M2 now because it's consistent with my story.
But I mean, it's just as Ed Hyman talks a lot about
the thing
this,
is,
and he's a very, 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 very smart guy.
Ed is
and you look at the chart, right? It goes way up. All right, and a year or two later, so does inflation, and now it's been crashing way down.
The growth rate has slowed dramatically, Larry, and this ties into this notion there may not be as much excess bank savings as people think. Certainly the growth of savings has slowed. We see the savings rate, it's only 3.1%. And again, when the savings rate's that low and you've got these negative wealth effects that are coming from crypto and stocks and bonds and housing, you have to assume at some point, or at least I am, households are going to have to rebuild those savings. Now, they're going to earn some interest on it because rates are high, but they're going to rebuild those savings. And typically that's bad for consumption and by default GDP.
Hyman reports that bank deposits are shrinking.
There's not going to be any fiscal rescue either next year. The economy is going to go under. We have a divided government. The Republicans will not come in.
We got to get out. They're yelling at us, John Carney and Joe Lavorgna. I think that's the end.